Okay, so welcome everybody to Private Equity Confidential, the only YouTube channel completely dedicated to private equity with an emphasis on the mid-cap market and Europe. And so I'm here with Jonathan Cooper, who's had a long career as a fund manager in Central Europe. And so Jonathan, tell us a little bit about your career as a fund manager. How long ago you got started? How big the fund you managed?
Sure. Yeah, this goes back quite a few years now. I actually got into private equity when I was living in the States, an internship a long time ago, and then made the decision to move to Central Europe in 1997. Moved to Croatia and started working for the CEF Croatia Fund. And then from there progressed into becoming the manager of that fund. Then I managed a fund for Poteza, also for Southeast Europe. When the financial crisis came, I found better opportunities in the Middle East, so I worked in Oman and in Qatar, managing funds and working for fund companies there, before returning to Central Europe back in 2016.
Oh, that's interesting. So you've basically managed 3 funds in 2 specific regions, which is sometimes unusual for fund manager, but interesting. So I think the first fund you mentioned was CEF, which is SEAF, and I believe that's a kind of lower mid-cap fund management group, and they're pretty much global. So how did you find CEF? How big was the fund, and what was its mission?
Well, the fund I was managing was a $10.1 million fund for Croatia. It was a carve-out of a larger regional fund, $30 million fund we had for Southeast Europe. And exactly right, CEF's based in Washington. They're oftentimes the first fund manager or early fund manager into emerging and frontier markets. At least that was their strategy at that time. So we were the first fund in Croatia. It was just after the war finished, and we were there to obviously make investments to make money, but also we were part of a economic development project spearheaded by USAID and the World Bank to do development work in Croatia as well through equity investments in private companies.
Right. So the fund was 10 million.
Mm-hmm.
So how many investments did you make, and what was the average size of investments, and what kind of investments did you make?
The fund overall made about 20 investments, which is too many. A lot of them were quite small. What was interesting though is a small country back then, and there wasn't a lot of capital in place. So we actually did some interesting investments with that money. We did an investment in cable TV, which we rolled up. We then brought in Soros Private Equity to come in as a follow-on investor, as well as DEG.
That was me. Soros Private Equity.
That's how we.
Anyway, that's for another interview.
There's a whole story about that. That was fun times. But turned out into the biggest cable TV company at the time. We also did an investment in what became the biggest ISP that got exited to Deutsche Telekom. We did an investment in one of the biggest pharmaceutical distribution companies, which was exited to a German company. But we did some pretty interesting early stage
stuff.
a
variety of sectors. 20 investments. So it's interesting, I think, for viewers to think, so you say that 20 investments was too many for a fund. Why was it too many? What was the problems of managing 20 investments, and what would you say would be the ideal number of an investment for a PE fund manager?
Yeah, and that's a multifaceted question, let's say. So it was too many for us because our average investment size was probably somewhere around 400,000 US. And the management fees you get out of a small fund aren't that significant. So we didn't really have the resources from a management company perspective to provide partner services, let's say, to all those 20 companies. And of course what we did is we focused on the higher potential ones. But I would say that it's hard to say the correct number of companies for portfolio, but I would say per investment manager, 3-4 companies is probably the maximum amount that you want to be following. Obviously, if you're doing VC, it's very different. The VC is kind of a different animal to private equity. But in the PE space, to really provide the kind of support and board level participation in the company, if you're working with more than 3-4 companies, you're probably getting spread a bit too thin.
So the rule is about one investment officer should follow 3 or 4 companies in that space that you were doing.
Yeah, and it'd be a senior person who's at the level where they can represent the fund on the board and manage the investment from the fund's perspective.
Okay, now how did you find exiting the investments from that first fund?
Well,
was that a challenge?
Yeah, it was a challenge back then. Not many people were investing in Croatia in, our vintage year was, I think, about 2000 was our vintage year. So we're doing exits in early mid 2000s. There wasn't a whole lot of interest in investing in Croatia, so it was a challenge. Things like the cable TV and the ISP and the pharma company, we were able to exit because those were attractive to international investors. But we did, for example, an investment in a startup company called Docking, which was making demining equipment. In Croatia, they had a lot of landmines, and it was a 2-person startup. Today, it's a 500-person company. They're doing 30 million a year in revenue. It's a great success story, but it was impossible to exit that when we tried to exit it in the mid-2000s because it was a specialized company, very successful, but based in Croatia, and in the end, we had to sell our shares back to our partner, which, as we all know, is never a preferred exit route.
Yeah. So, well, that's a very interesting experience of managing a smaller fund, and I think that's interesting. And perhaps in a minute we'll talk a little bit about your experience with a larger fund, that being Poteza.
Mm-hmm. That sounds great. Yeah.
So, Jonathan, let's talk about the second fund you managed, which was still in Central Europe.
Mm-hmm.
So you haven't moved at this point, but it's Poteza, and it's a bigger fund. So tell us a bit more about this second fund that you've moved on to.
Correct. Yeah, so Poteza was a Slovenian-based financial services company, and we raised a $55 million fund focusing on innovative growth companies for Southeast Europe. And that's...
So 55 million euros or dollars?
USD.
55 million US dollars, so a lot bigger than CEF, five times the size of CEF. This is the first fund you managed.
Correct.
Okay.
Yeah, I got promoted. And it actually started out great. The fundraising went well and worked well with Poteza. We did 2 investments, but our vintage year in the fund was 2007, and our final close was in late 2008, if I remember correctly. And unfortunately, that was when the financial crisis came. And Poteza, who was a fund sponsor and was a diversified financial company, they were doing lots of things, not just private equity and venture. They had leveraged up their balance sheet in August of 2008 to buy shares in a bank from EBRD, actually. And a month later, the Lehman Brothers collapse happened. And of course, bank valuations dropped off a cliff, and Poteza found itself insolvent. They had taken some short-term loans to finance this acquisition. They had to pay them back, and the value of the shares wasn't there. So unfortunately, it didn't have a happy ending. We did 2 deals, and when the sponsor collapsed, we actually capped the fund at drawn down capital at that point, and just to stay with the 2 investments. And I left the fund in end of 2009.
So the fund itself started on a good premise, but basically the financial crisis hit the main investor of the fund, and that had a knock-on effect to the fund, which then had to be closed down effectively.
Exactly. So we were a victim of that crisis, unfortunately.
So the second fund kind of failed for reasons not to do with the merit of the management team, but for external reasons.
Yeah.
So as a fund manager, did you learn more from the failed second fund or from your first fund?
I learned a lot from both experiences. From the first fund, I learned a lot about making investments and managing the investment process with companies, working with companies, growing companies, etc. For the second fund, I got a rude lesson in corporate politics, which I hadn't had up to that point. And you see when things start going bad, everybody's running for a lifeboat. So it was very disappointing. But I learned let's say, more of a life lesson, if you will, from the Poteza fund.
Okay, well that's interesting, and I think obviously the team sort of disbanded at this point, and people went on to do other things, which led you to move to the Middle East after Poteza.
Correct.
Okay.
Yeah.
Okay, well that's very interesting. So we'll look forward to talking about that one as well.
Sounds good. Hey, if we do something, I got an idea. So,
take a few seconds because.
So, Gavin, this is a beautiful location where we're shooting this video, and even though I'm getting very cold, and my wife's going to be upset if she sees me on YouTube wearing this jacket, because that wasn't the original plan this morning. But we could either tell people where we are, or maybe we can have a contest and people can answer in the comments where they think we are, and if they get the right answer, they can get some kind of special
t-shirt.
access.
They can get a t-shirt. I'll figure out a t-shirt.
Okay, a t-shirt. So
made in Bangladesh.
And if they forward this video to 3 of their friends, they can even win maybe 2 t-shirts.
If you can guess where we are, you win a t-shirt.
Just put it in the comments below.
It's in Europe, Central Europe somewhere.
And try to guess how cold we are right now, sitting on this stone this stone wall. But we'll survive. Don't worry.
Okay, let's move on to your Middle Eastern phase. So after you departed from Poteza, and I think the story of the disbanding of a mid-cap fund, it does often happen. It can be succession problems, it can be problems with LPs. In your case, it was some event that hit your LP, and a very cataclysmic macroeconomic event in your case. So you moved on to the Middle East. So how did it come about that you ended up managing a fund in Oman, of all places? I think it was.
Yeah, so before going to Oman in 2011 to manage the Growfin fund there, I actually had a stop in between. The financial crisis particularly hit the Central Europe quite hard, and I was looking for other opportunities outside of the region, and I got a consulting assignment in Afghanistan to write a business plan for a Sharia-compliant agricultural equipment leasing company. And I went to Kabul for 5 weeks to do that, which was a very interesting experience. Not keen on going back. It's an interesting place, but a tremendous experience. And based upon that, I was then contacted by Growfin, actually through LinkedIn, through a headhunter, to go to Oman and to head up their fund there. So I moved there in 2011 and had a very good experience managing it. Basically, it was a $17 million SME debt fund. But it was zero collateral. The debt was really just a structuring mechanism.
So you basically got the job to manage a 17 million debt fund in Oman, and you just got it through LinkedIn, which is pretty amazing for the private sector equity to get a job to head up a fund through LinkedIn. I think qualifies as something a big outlier.
Surprising. Well, I think I just changed my profile picture, and I looked really sharp on the new profile picture. So that was what got me connected.
Okay.
I think.
So how did you find managing a debt fund, which I think Growfin was, as opposed to an equity fund? What were the different challenges for doing that?
It was, we were doing uncollateralized loans, so we were taking a lot of equity risk, but we were taking what collateral we could.
So was it like a mezz fund with subordinated debt kind of a thing?
Like that, yes. Yes,
Okay.
it was primarily, it's very hard to exit companies in Oman if you invested in equity. So the idea here was to have a self-liquidating instrument, which was a debt instrument, but while taking a lot of the equity risk. And it was different though. We're using contracts that were based upon debt providing. Obviously our financial models were slightly different. Our return expectations were lower. And although it was equity-like exposure, it was definitely less risk than I had taken previously, but with less upside. So I had to get accustomed to those parameters. And then within Growfin, they had developed quite a nice screening process and filtering process based more along the lines of what a bank lending department did, which is new for me. So I found that quite interesting to get that exposure to that side of the business.
And I think one interesting topic that raises is that there's often an argument made that mid-cap private equity particularly is a kind of local business and the skills don't transfer very well. You obviously transferred from Central Europe to not to the Emirates but to the Gulf region, and it seemed to go fine. So how did you find the change in region? Was the skill set required the same, or was this huge abyss from going from one region to another, which many people in the industry claim?
Yeah, that's a very good question, and actually the performance we had when I was in Oman was very good, so that worked out very well. I found that when I went to Oman, what I really did was took a step back. I had 6 staff that were all Omanis, and I was clearly a manager, because I didn't know the local environment, I didn't know the local language, although English is very heavily spoken in the Gulf region. But what I tried to do was to work with them, to empower them more, and work with some of the back office stuff, the analytical stuff. I would obviously meet with the companies and work on the negotiation, but I definitely recognized I was the fish out of water, so to speak, and I needed to stand back and listen to my local team.
Okay, so there was a difference.
Yeah.
And how long did you stay in this position in Oman? You were there for a number of years?
Yeah, I was in that position for 2 years, and then I shifted to an Omani asset management company to head up their private equity. Yeah, I was as I mentioned, Growfin was more of a debt fund with equity characteristics, but it was debt. And I wanted to get back into private equity, and I was offered a position with Vision Investment Services, an asset management company.
So now you're moving from being a sort of independent fund manager to being part of a larger group, so a kind of a captive fund or an in-house fund, if you will. So how did that change your sort of way of managing investments? Did that make it more challenging or more restrictive?
Yeah, it did, because being part of a bigger group that had an idea to start doing some private equity investments off its balance sheet, there wasn't a clear commitment from them. It wasn't as though they said, hey, here's a $20 million, $30 million allocation, let's go do private equity with that. So not being in a fund structure with a fully committed investor base made it more challenging. And when I joined that firm in 2013, oil prices were about $120 a barrel, and when I left 2 years later, oil prices were $30 a barrel. And during that slide, everything was put on hold in the Gulf region in terms of investments, new projects, things of that nature. So in general, it was a very difficult time to invest because nobody wanted to catch the falling knife, so to speak, as the oil prices fell. And of course, 50% of the GDP there, I don't know the exact number, but let's say 50% is based on oil prices. So as that was coming down, it was a pretty significant hit on the economy.
And then I believe you moved to Qatar for a period.
I moved to Qatar. I rejoined CEIF, the same fund I had worked with in Croatia many years previously. They had won a contract from Qatar Development Bank to help Qatar Development Bank set up an SME equity fund, $80 million fund. And they brought me in as the chief investment officer for that process. And we were there for a year, training staff, policies and procedures set up, building pipeline. We got a couple deals approved. So it was a good experience, but it was kind of like my stop on the way back to Central Europe.
Yeah, because I think one of the issues there is when you're a fund manager and you have one single LP, obviously if he catches a cold, you get pneumonia. So I guess that was one of the instances of having just a single LP rather than the spread of LPs in a fund. How does that change the way you manage your fund?
Yeah, it makes it more challenging. The shareholder meetings will go a little bit differently when there's just one shareholder. We were certainly subject to, let's say, the variations of what was going on inside of Qatar Development Bank. And of course, they have different objectives from a lending perspective, and it's a government-owned entity, so they were being pushed from different sides from time to time, and we were then, the dog was wagging the tail, so to speak. So it was not as independent and was not as satisfying as an experience for sure, because...
So Jonathan, another area of interest is this area which I wanted to explore with you, is the area of transference of skills, because there's one school of thought saying, well, that mid-cap private equity is really a local business and you can't transfer it, but you do. If I look at the markets such as, say, for example, Europe, Middle East, Africa, Asia, you see there's a lot of fund managers who come from other backgrounds, but they seem to be particularly from the Anglo-American sphere, particularly with a few French who work in Africa. So what's your opinion about the transference of skills, moving from one region to the next?
Well, I think there's a technical skill aspect which is easily transferable from one market to the next. The way you analyze deals, the process you go through, the models, etc. I think the other aspect of it, which is more the cultural aspect and the network aspect, that's also something that I've certainly seen internationals like yourself and me that are more easily able to move into different markets, probably because of our international backgrounds to begin with. But I think it's also very important that if you're doing that you also have a strong local team and that you're able to understand what works in those markets and what doesn't. I've certainly seen Americans, for example, I'm American, come over into Croatia and just fail miserably because they just don't understand, they don't get it.
They don't get the nuances, the way things are done.
Yes, exactly. And they have preconceived notions about how things are done, which may not be an actual fit. So there's certainly no, I think it very much comes down to the individual, if they're able to go from one market to another.
Transferring the skills comes down to the individual, where that individual has the technical skills that are easily transferable, plus the cultural sensitivity for the nuances which would make the success or the failure of the transfer, something like that.
Exactly.
So Jonathan, I think it brings us to another topic that was very interesting, is that you've actually made a transition from being a fund manager for quite a number of years to now being an entrepreneur, in the sense that you've built up a company, albeit with some partners, which you're managing full time. So how did it happen that you went from being a fund manager to being an entrepreneur? How did that come about?
Sure, it's a good question. I think I've always been an entrepreneur at heart in many ways.
But all fund managers say that.
And most of them aren't. Most of them are.
Most of them are not. Right. Okay.
Wearing a suit and tie and pushing paper. And actually, I started my first company after my experience with CEIF. I started a financial advisory company I didn't talk about earlier called Ascendant Capital Advisors, which I think a lot of the Central European funds will know, because my former partner there is still running it, and they're actually very proliferate right now. But after that, during the crisis, when I went to Afghanistan around the same time, I started a TV channel with my wife called Classic TV, which was my first real entrepreneurial experience. And my wife has a background in marketing and an MBA, and she was running the company when I was more on the planning and raising capital side. But that actually grew very nicely while I was on these adventures in the Middle East. And I started up, when I came back from the Middle East, started up another company which I'm spending most of my time on now. It was about 3 years ago. And when I was coming back from the Middle East, my idea initially was, how can I bridge these connections? As you pointed out, Gavin, I had this great opportunity to work extensively in 2 different markets. And Central Europe is lacking capital, Middle East has lots of capital, so the idea was to bring them together. But what I found was that getting the Middle Eastern or GCC investors to come to Central Europe was mission impossible, because they all wanted to invest in London property or New York. They didn't want to go to Croatia or Serbia. And instead, I kind of shifted gears and I looked for opportunities to take from Croatia to Middle East. And around that time, I went as a visitor to the Museum of Illusions in Zagreb, which is a Croatian concept developed by 2 Croatian guys, Tomislav and Roko. And I loved it, my kids loved it.
So just to be clear, you can take your kids there, there's a bunch of mirrors where you're distorted and all the kind of stuff like that.
Yeah, it's a bit more involved.
A bit more involved, but
more educational.
Right.
But yeah, you can go there. There's 80 exhibits. It's a bit educational. It's a lot of fun. It's very interactive. There's no technology. We're anti-technology. Too many screens in the world today. This is more things that you can touch and you can feel. And it's been incredibly successful. So I approached the founders when they had one with my investment hat on to do an investment, and they said, no, but we're interested in franchising. Do you want to help us with that? And I said, sure, why don't you let me do the franchising in Middle East, North Africa? I have experience there, and I can develop that market on your behalf. So we started cooperating on that basis, and we've done a lot of work since then in terms of developing the concept and the franchising and what that really means. And today there's 19 Museum of Illusions. We just
19 museums.
19 museums. Our most recent is in Paris. We have museums from Shanghai, Kuala Lumpur, Dubai, Vienna, Paris, New York, Dallas. And we're building currently 12 more, are in the process of being constructed. So it's been very, very successful. And it's been a lot of fun. And I've been able to build up a team. We're doing business internationally, even though we're based in Croatia. And as I mentioned, it's just really, really successful for the franchise partners and of course for us as the franchisor.
That's great. And you sold your TV channel for a 7-figure sum, so you're a serial entrepreneur.
Correct. Sold it last year.
And you've built this chain of 19 museums, which is a fantastic achievement. So you've obviously succeeded as an entrepreneur, even as a serial entrepreneur. So I think the question I would have for you is, how much did your experience as a private equity fund manager help you to become an entrepreneur?
A lot. I estimate that I've met 3,000 or 4,000 companies in my career, either at the owner or CEO level, and that just is a tremendous opportunity to look at all these different business models from a very detailed perspective. And I've also found as an entrepreneur, a lot of my inspiration for ideas comes from observation. So I went to the museum, I loved it, I start counting the number of people inside, I figure out what the rent cost is in my head, and I realize it's quite profitable. It's amazing to me that even to this day, with 19 museums globally and a very clear online presence, no fund has contacted Museum of Illusions to see if they want an investment or to get bought out. So where are the Central European fund managers? They're all trying to buy out 20-year-old soap production companies and leverage up the balance sheet. That's fine, but there's some really good growth opportunities in Central Europe that I think are being missed. The TV channel, I watched Turner Classic Movies when I was in the States and realized there's nothing like that in Southeast Europe, so I created it, along with my wife and a lot of help. Right now I'm looking at another new business opportunity in the healthcare space, which is something that's important to me personally. Nobody's doing it. We'll see if that comes to fruition, but again, I look at where I see a gap for myself personally, and I try to fill that gap. I did have a company once that was a software company that we did it based upon creating a business plan we could raise money on, and in the end it didn't work out because I was trying to artificially create an opportunity, and
so
I realized
basically you set up 4 companies, 1 flopped out of 4. So you got 3 hits out of 4, which is pretty good.
Yeah.
That's a pretty good hit rate, yeah.
Yeah, I've been quite pleased, and my wife is satisfied, which is also extremely important.
All right. Well, I think it's great. I think one of the interesting messages of this interview is that private equity gives you the skills to do all kinds of other things. Yeah, I think is good.
I actually was in a conference once, this is several years ago, and somebody was asking, what do private equity guys do when they leave private equity? And
well, I set up a YouTube channel, which is not as good as what you've done, but I'm doing it. I'm trying.
There you go. You're a YouTuber.
I'm a YouTube guy. Yeah.
I think if you wear the backwards baseball cap, your channel's going to explode.
And the skateboard.
And the skateboard. But this guy was asking me, what do private equity guys do? And he didn't understand how the skill set was transferable. And I tried to explain to him, they do whatever they want to do, because from the investments we've made and working with these companies, you get exposure to marketing, to sales, obviously financial, accounting, controlling, fundraising, organizational management. I still think that private equity fund management is the greatest job in the world. I'd like to go back to it at some point because it's very challenging and it's very dynamic. But certainly, if you have that background and experience, it's transferable in a lot of different ways.
All right, on that note, thank you very much, sir.
Thank you,
Fantastic
Gavin.
interview. Fascinating. I think our channel viewers are going to love it. If you enjoyed this interview, hit subscribe and like on my channel. Thank you very much.
And I'll put in the comment below whether or not Gavin actually buys me lunch as he promised, or if he tries to renege on that. But
And don't forget the challenge, where are we?
Where are we exactly? Thanks.